We have Micron doing something insane today. We have it going up 17%. Keep in mind, Micron has had an incredible year, right? They're up year to date 180%. Now, what the heck is going on? What can cause this to happen? Is this the time to buy? Is this the time to sell? What can you do about this? Are you missing the boat if you're just investing in crypto, or if you're investing in real estate, if you have cash on the sidelines? Like, this is an incredible time, because in history there have been very few times where we have seen a company or a set of companies that have increased their earnings this quickly. Keep in mind, back in 2024, Micron had earnings per share of 70 cents. Last year, $7.59, so a 10x increase. This year, they're talking about doing much more than that. I mean, they're already at $21 in trailing PE on the last 12 months. We're expecting $60, $70 this year. And then they just got an increase, an analyst increase for the next year to $155, then $167 the year after. So this is why they're moving up today. We have UBS increasing their price target by 3x from 535 to 1,625. They're basically saying that they are upping their EPS estimates drastically over the next 3 years because they have done a great job of increasing the length of their contracts. We've talked about this before in some of the podcasts, but from the past, we know that memory is very cyclical, right? They can have great margins, but then they build out enough, or whoever's buying kind of stops, slows down, the competition comes for the suppliers, and then they lower their margins, they stop making as much money, and then what do you know, their earnings per share goes right back down. So now they're saying, we were thinking they're going to make $133. Now we're saying we think they're going to make $155. This is in 2027. Then 2028, instead of $122, they're going to have $167. Then in 2029, instead of $77, they're going to make $117. So we think that their contracts are getting longer, so they're going to have better earnings per share. They're going to lose a little bit of revenue right now to have revenue and profit in the future. We also think that their price to earnings ratio is going to go up. So right now it's at a 9 forward price to earnings ratio. We think it's going to move to 15 based on the fact that we're going to have better vision into the future. So that's why the stock is up so much. Not because necessarily just the price target got moved up, but because this company, this analyst, says that they're going to actually have their earnings continue to increase and stay around longer than people expected. So they're expecting them to do like $400 billion in free cash flow in the next 3 years, which is 40% of what the company is even worth in 3 years. So this company is not expensive still. It's just a question of whether they're going to be able to continue to make a lot of money after 2029. Well, their earnings continue to go down, right? Because right now we're expecting $400 of earnings per share in the next 3 years. But after that, does it go down to like $50, $40, $30 a year? I don't think so. I think we're going to continue to see them have great earnings, but that's the question on everyone's mind right now. So that's why it's up 17.5%. Now, again, this company is not expensive right now. At least when you look at earnings per share. But again, people are wondering, or price to earnings ratio, people are wondering, will this demand continue into the future? Will they be able to command high margins, high prices, and get high margins? So that's a question. Now, I made a video on my own channel about how 14 shares of Micron is kind of the magical number, right? Micron was about $700, I believe, when I made that video. And I looked at maybe June 24 as being an important date, get 14 shares before that date, because that is when we actually see their next earnings. And my point was, every single earnings, we're seeing another earnings in the future. Like whatever their forward guidance is, it's another quarter. So in such a short time span, like the next 2 or 3 years, every single quarter makes a huge difference. I mean, if you're looking 2.5 years out, every single quarter is 10% of where you can see out to. So we have their earnings, and this company is very short-term oriented. Like everyone's short-term on this. It's not Amazon where they're thinking 10, 20 years out that they're going to have a ginormous moat. No, it's how much money can they make in the next 2, 3, 4 years? Are they gonna have good guidance moving forward? right? So that's going to be an important date. We can move up or down before then, who knows? But that is where a lot of people are going to be paying attention to see what kind of demand they have. Now, NVIDIA just had earnings. They're great earnings. They have great guidance moving forward. But yeah, people are still cautious. Even if these companies continue to grow, they want great earnings. They want great revenue and earnings per share. They want good guidance. They want a narrative to be spun. They want good answers to questions. Like, these companies are high risk, high reward right now because they have moved up a lot, but they're not expensive when you look at them, but they're still high risk, high reward because there's so many people trading them. They can move 20% a day. Now, I said 14 shares was an important number to hit because, everyone's in a different situation. To be clear, like, 14 shares might not be anything to you. You might not even realize that there's a difference in your checking account if you lost $10,000. Or you could be someone that has never had $10,000, but 14 shares, when I was talking about it in that video, was about $10,000. Now, looking at today's prices, 882 times 14, you would have about $12,300. $2,300 just since I made the video about a week ago. That's kind of crazy, isn't it? If you are an investor, you can have returns like this in a week. $10,000, I think, is an important number because $100,000 can be very difficult, especially when you're younger. But if you can get $10,000 in the market, I think that's where a lot of people start feeling like an investor, right? $100 doesn't really matter. Like, just to be clear, if you have $100 in the market, that doesn't mean you should quit or you should sell or anything like that. But if it moves up 5% or 10%, it's still probably less than what you make in a day, maybe in an hour. Now, if you're in a different country and you make maybe 50 cents an hour or $1 an hour or something, $100 might be significant. But in the U.S., based on minimum wages, if you're spending too much time on a $100 portfolio, it just kind of wastes time compared to actually working and making more money. So $10,000, I feel like you start feeling like an investor. You can have your portfolio go up $1,000, $2,000 in a week. If you're all in VOO, you're not going to have that, the S&P 500. But in something like this, you can have bigger moves. So 14 shares, I think, is where you start to feel like an investor. You start thinking about opportunities, you start wanting to invest more and more. And then you can have these moves. So is it too late to buy Micron? No. Keep in mind, unless your thesis just changed, make sure you understand why you're buying today versus buying a week ago or a month ago or something like that, right? You don't want to be just chasing it because it's up. Like, grow your own conviction, because otherwise, if this goes down to $300, are you going to be able to handle it? Because that will happen. Like, we see big moves. Not that it will necessarily go down to 300, but a couple months ago, it went down 30% in 12 days. So that could happen again. You need conviction in the companies you're buying. I've talked about this myself, but I'm heavily invested in the companies that are actually buying the AI, not all the makers of AI. I think that I don't have to time them as much. And obviously that hasn't been the best play so far because these companies have done amazing. And, Amazon, which is my largest holding, it's up nicely this year, but not compared to these companies. So I'm taking the longer term approach. I'm not looking at the next year as much as the next 5 years, 10 years. And part of that might be risk tolerance. Part of that might be just not wanting to deal with the tax side of it as much. Or, I just have stronger conviction in Amazon. I've been buying for nearly a decade. I've been buying Amazon, right? Or at least 6 years I've been buying Amazon. But these companies are newer, so I don't have quite the conviction yet. But I have made some trades, right? Like this, I've talked about this on my own channel. I don't know if I've mentioned it here, but I have a 2x long position on Micron. It's a pretty small amount of money for me, but I did open up a 2x because you can trade on that platform, which is kind of interesting. But yeah, the fact is, it's not too late for these companies. They could go down, right? They could go down. I don't have the same conviction in them that I have in Amazon, Google, that kind of thing. But they're doing a great job. They've been the best performers. The management teams have done fantastic. The investors are making tons of money and they deserve it. Let me know your thoughts on this underneath the video. Are you buying Micron today? Are you selling it? Let me know. Thank you so much.